Good morning, children. In commerce, today we are going to see about Unit 2, Lesson 5, Capital Markets. In the last class, we have seen about financial market. Yes, what is financial market? It is a market wherein financial instruments are bought and sold. And in types of financial markets, we have seen on the basis of maturity of financial claim, the financial markets are classified into two types. One is money market and another one is capital market. So in today's class, we are going to see about the capital market. In that, today we are going to see about meaning and definition of capital market, characteristics of capital market, kinds of capital market, functions and importance of capital market. First, we will see about the meaning of capital market. As we all know that capital is required for a longer period, so the market whereby the buyers and sellers engage in trading of financial securities like bonds and stocks. In other words, we can also say that the facilities and institutional arrangements through which long-term funds, both debt and equity, are raised and invested. Characteristics of capital market. The first point is securities market. That is, the capital market deals securities like shares and debentures, so it is called as a securities market. The second point, price. In capital market, price of securities are decided based on demand and supply. Third point, participants, that is who are all involved in the capital market. Individuals, corporate sectors, government, banks and other financial institutions. Fourth point, location, that is the capital market is not confined to a specific location because of the online trading, but usually the stock exchanges dealt with capital market securities. Fifth point, market for financial assets. In capital market, financial assets like stocks and bonds are traded. Now we will see about the kinds of capital market. Generally, capital market is divided into two types. One is primary market and the other one is secondary market. First, we will see about primary market. Primary market is a market for new issues. Otherwise, it is called as a new issue market. That is, the companies issue securities to the public at the first time. In general, there are three methods to be followed for raising capital in the primary market. They are public issue, rights issue, and private placement. In public issue, the new companies raise its capital through sale of securities to the public. In rights issue, an existing company raises its additional capital through the existing shareholders. Private placement is a way of selling securities privately to a small group of investors. The second classification is secondary market. Secondary market is a market for old securities or an existing securities. That is, it is traded in stock exchanges or through online. That is, the securities which are issued in the primary market are traded or sold in the secondary market in two ways. That is, the company sells to the investor. Then in the second step, the investor sells to other investors. Now we will see about the functions and importance of capital market. The first one is savings and capital formation. That is, it mobilizes savings from all the people in order to form capital. Second point, permanent capital. That is, it helps to the companies to raise permanent capital. The third point is industrial growth. That is, through capital formation, many industries were started, so it leads to industrial growth. Fourth point, ready and continuous market. That is, the stock exchanges provides the buyers and sellers continuously purchase and sell their securities. The fifth point, reliable guide to the performance. That is, the capital market helps the companies to assess their financial position. Thereby, it increases the efficiency of financial performance. The sixth point is proper channelization of funds. That is, it helps the people to make investment in those companies which are giving more returns. And the next point is easy liquidity. Liquidity means easy convertibility into cash. That is, the securities are easily converted into cash. So the secondary market offers this facility.